let's get in the trenches here. Scott, let's break down those stocks that have had failed breakouts. I think it's a really good time to explain that to the audience, and also then how to invest in that going forward and how to protect yourself, quite frankly. Right. And I just want to highlight Lululemon because it was on a tear after it reported, killer earnings, but didn't hold new highs on Wednesday. How do you know if this is just kind of a pause or if it's really a total failed breakout and it's going lower?
Well, we need to put the pieces of the puzzle together. And just talking about the indices, remember yesterday we talked about, can we hold 50% of the gains? Can the retracement levels hold to give us clues to the validity and strength of the overall markets? Part of that package is that you need to have breakouts work. You need to have leaders go. So yesterday, Lulu, which has been one of the strongest stocks that have given us some good entries, have now, trying to break out, failed. So that's giving us some clues that maybe we're not back in such a strong uptrend, that we're still in correction mode because stocks aren't having successful breakouts. So if you look at Lulu, you'll see here, this was a decent entry. Remember we talked about it in the morning call when it broke this descending trend line. Gave you a nice 2-day move, and then on a third day, I'm not going to put too much pressure on this scenario because it did have a big move. But this right here is one of those breakouts where you push through, close back below. This is a short-term sell signal. So if you're in like a tier 2 here, this would be a sell signal to get back to tier 1 and a day to take notice to see how it holds up. If it goes sideways here and holds the majority of this move, like the top 25, 30%, there's a chance in a better market environment you'll have a more successful breakout, but this just shows you that you can chase scenarios even at new highs when in a bull market. That's a great trade.
Now, Lulu is a favorite of a lot of portfolio managers as well as a lot of investors, so what should they do with it? And I'm curious as to the volatility you'll expect headed into the end of the second quarter also.
Well, they should manage their positions. It's not all or none. It's a tier system. So if you were involved in tier 1, let's go back to it, in this area, in this space, and they added to it on a breakout, on a failed new high trade, they should sell some in-the-money calls, take some premium, protect themselves. If you're in it as an investor, you sell some here, and if it goes sideways, you could always get back in for a momentum trade. But right now, that's a sell signal. It's one of those days to take notice that could lead to a bigger down move like we've had in other stocks, like we had in Netflix when we spoke about that, about 2 weeks ago when it made new highs, failed. It led to a 30-point move.
And tier 1, for those of you watching, lightly invested. Tier 2, more heavily invested, and then you get the theme from there. All right, let's also hit on VRNetX. The stock has really been trying to break above this, 28.50 level, but failed to do so twice. This seems to me a little bit more bearish even than Lulu.
Well, it's just showing you that people don't want to have big time risk, that they're not letting stocks break out and run. Stocks could act strong, there could be trades there, but unless you're in a real big bull environment, which we're not, these things are not going to just continue to go. And if you look at VHC,
and fair enough, it's up about more than 800%.
Yeah, it's acting really well. This has been an unbelievable trade, starting here, and now it's flagging again. But until this market gets into a better composure, it's not going to just continue and go. That's why you can't chase these type of moves, and you have to be very, very careful.